But when it comes to the art market, it's an extremely inefficient market. I always call it the largest legal insider market that exists.
Yeah, I know.
And that for me was super attractive.
This is the Assetizer Podcast.
Welcome. How you doing?
Good. How are you?
Yeah. I'm here today with Pascal Schneidinger from Partasio, the founder and CEO, right?
Correct.
Okay. And it's a company dedicated to making blue chip art investments available to not necessarily the masses, but to all qualified investors. All right.
Correct.
Cool. And one of the interesting things about you, I thought, from our conversations before, is you don't really have like an art background, and you have a very kind of diverse background of all sorts of different things. So maybe before we get started, you can tell us a bit about yourself.
Sure. Great. Thanks for having me.
Yeah.
So my name is Pascal. I'm from Zurich originally. I grew up here, went to school here, but then I moved to the US for university. Went to Wharton, and after Wharton, I spent quite a long time in New York and London in investment banking and private equity, especially on the real estate side. And I always wanted to be an entrepreneur, to be honest. So in 2011, when I finally felt ready to do something on my own, I quit private equity and I moved to Shanghai, where I started a business in a totally different industry. I had quite a lot of pretty large home furnishing retail stores in China. So really selling furniture, home accessories, home decoration, home textiles for Chinese consumers. So very, very different, not a financial business at all. It's really an operational business. And I did that. Yeah, please go ahead.
I'm just curious, like, how does a guy from Zurich and then the US decide, okay, I'm going to Shanghai now?
It's random, but not really random. So when I was in real estate, like I said, I wanted to do something more entrepreneurial, and what would have probably been the most obvious choice would have been to do a real estate fund, given my background. However, after the financial crisis, I was simply not very confident that I could raise sufficient money for it to make sense. So I thought about what else could I do, because I just didn't want to stick around in a corporate culture, to be honest. And I strongly believe in consumer markets, and at least at that time, I believed that China is certainly by far the most fascinating place when it comes to consumer markets. That's where all the growth was happening. So I thought, what can a stupid Swiss guy who knows nothing about China, nothing about consumer markets do in China? And after doing quite a lot of research, I came to the conclusion that as Chinese consumers become wealthier, the need for lifestyle becomes bigger. And one aspect of lifestyle that is really not developed yet in China at all is home lifestyle, because you don't invite people over, so at home it looks quite not scary, but not very well furnished. Yeah. And if you look at the market, you have a lot of suppliers on the very top end. All the Italian designer stores that have been in China for a very long time, just charging a multiple of what they're charging in Europe. And at least, and when it comes to the low end segment, there's a lot as well, of course, but when it comes really for value investors, white collar people, there was nothing. And so I just went there and created a new concept for the Chinese market.
Okay, so you kind of found a new market,
yes,
or maybe an inefficient market, because we're going to get to that also on the art side. Cool. So there you are in Shanghai. What happens next?
So I spent about 10 years running this business in China, and then many things happened in China, of course. And for multiple reasons, I decided to leave and came to Switzerland, really with the objective to start this new company that we're going to talk about today, Partasio.
Okay. Yeah. Why don't we jump right in it? Tell us about how Partasio got started. I know you were thinking about it for a while.
Sure. So when I realized that China is not going to be another 20, 30 years for my personal journey, I obviously thought about what to do next. And I really spent 2 years thinking about all kinds of new business ideas. And the one I really liked, because of my background, is kind of what I came up with Partasio, of course, which is I always believed in diversification of financial portfolios. I think many people talk about diversification. Most of it is a bit blah, blah, it just sounds sexy, but most of it is really not diversifying. So I looked through different asset classes, and that's how I got stuck with art, to be honest. So as you kind of mentioned in the beginning, I'm not from the art world at all. I've never worked in the art world. I'm not a collector. I'm just a regular guy who once in a while goes into a museum. But there was really no special affinity with the art market for me at all. But when I started to read more, learn more about it, I just realized, A, it's a very big market and it's a very inefficient market, and we probably will get to that, but I really like inefficient markets.
Yes, so you said that your kind of like your experience in real estate sort of made you attuned to these kind of markets and to looking for these kind of opportunities.
So, I mean, what I like about real estate, two things really. A, it's tangible.
Yeah.
You know, so you
Hands on
see
it.
what
Yeah.
you're actually investing in, which is the same with art, of course. And second, it is still a quite inefficient market, more so in Europe than in the US. But there's a lot of information that is not publicly available. And if you're really an insider, you can take advantage of these inefficiencies. And that's where the opportunity comes in. Because if you're in a truly efficient market, what's your edge? You really don't have an edge in the medium to long term, in my opinion. It's more a little bit about luck, although people don't like to admit it. But when it comes to the art market, it's an extremely inefficient market. I always call it the largest legal insider market that exists.
Yeah, I know.
And that for me was super attractive because I knew that if I can overcome these inefficiencies and take advantage of them, it would be a massive business opportunity.
Yeah, okay, so maybe we can look at that a bit more, because for most of us, like for me, for example, we think of the art market, I think of auctions, I think of Christie's, I think of like, you know, I saw once Jack Nicholson buy a $6 million painting on the telephone and all this other kind of stuff, right? So you think that that's the art market, and you don't really know, you know, who's good, who's not, or maybe like a small circle of people kind of understand it. You've got a bit of a different take.
So first, if you look at the market, about 50% of the market is public. You mentioned auctions, so that's public information, which means that the other 50% is private. So that means the information there is not publicly available, and insiders obviously have some information. Nobody has 100% information, but if you're truly in the market, you simply have more information than people who are not in the market, and this information asymmetry, again, creates advantages for certain people.
So how did you go about? So I get the idea. You sort of identified this market, right? And you said, okay, this reminds me a bit of real estate. It looks like something's going on here. But how'd you like get into that and understand it better? And you know, how long did it take you?
I spent really 2 years doing a lot of due diligence about the market, and the due diligence consists of two things. First, I wanted to test my hypothesis. You know, is the market large enough? Is it inefficient? Are there really opportunities the way I thought there would be? And number two, given I'm not from the market, given it is such an insider market, it was all about finding the right people from that market who have the insider information. So I really spent 2 years doing a lot of work on both of these aspects.
So I guess that brings us to Partasio then. So there you are. You got your idea. You have your you've done your research and your due diligence. What happens next?
So as part of my due diligence, I ended up finding two people from the art market who have 20 and 25 years of experience in the international art market, and they became my partners, so they're also shareholders in the company. And that is really the key. I don't know whether we're going to talk about this later, but I always say the winning formula in my business, and at the same time the big challenge, is to bring the financial world and the art world together. And the reason why this is such a big challenge is because these are two totally different worlds with totally different types of personalities. Imagine. And that's really tricky, you know, not only on an internal corporate side, but also from a business perspective. To bring these two worlds together in a complementary fashion is very tricky. And I think that's really also the reason why there are very few companies that are active in this market, at least from a professional perspective. And I think that's a little bit our unique selling point. While I'm certainly, by background, a finance investment guy, given my experience in China, I'm not the typical finance guy. You know, we had about 2,500 products in China. We had an interior design team within the company, and I was together with them on a daily basis. And while those guys are not necessarily artists, they behave very similarly to artists. So at least I understand a little bit how they think, how they communicate, and that certainly gave me an edge in how to communicate and how to deal with art people.
So obviously you're thinking of you're looking at this market, right? And it has certain attributes, et cetera, et cetera. What I'm curious about is you also had to think about an investment product, right? And how we get to that.
So, you know, I think one really key element is I always say there's no such thing like the art market. You know, it consists of many different segments, and the reality is also that 95% of art, you know, when you go to a random gallery, please do not buy it for financial reasons because it's going to be a terrible investment, right? So 95% of art you should really buy for cultural, emotional reasons, and that's it. So I think if you invest in art with financial considerations in mind, you should focus on the absolute top segment. We call it blue chip, but I can define that later if you want. So I think it's very important to define kind of what is your investment universe, what is your focus. And there, we focus on this top end segment because we believe from a financial perspective, it has the most interesting attributes.
Okay, and what exactly does the top end segment consist of?
So maybe a step back, we only focus on paintings because
Right.
it's by far the largest category in fine art. And we only focus on paintings that were created after World War II.
Okay.
And the reason for that is really due diligence, because as soon as you focus on older art, documentation becomes a bit tricky, and you can really not exclude 100% whether it's real or fake. And if you buy something for investment purposes and it's a fake, that's a disaster. And number two, where was the art during World War II, which is a very big topic in Europe. So we don't want to deal with these kind of issues. So for us, it's only art or paintings, in this particular case, created after 1945.
So no old masters,
No
no
old masters,
impressionists,
no sculptures, no impressionists,
none of that
this.
stuff.
No.
Okay.
So once you have defined that, then as I mentioned before, we focus only on the absolute top segment. And for us, what does that mean? If you think about art as an asset class, it's an asset class that does not generate cash flow, meaning value really depends on supply, demand. And I think that's why you need to really understand the supply-demand dynamics. Supply, usually in the top-end segment, not a big problem because either these artists are not alive anymore or they're managed by the big galleries. So supply is okay. So it's really a demand issue. And the demand, in my opinion, must be as broad and as deep as possible because that lowers volatility. But if you're in a market where there's tons of demand, if there's some change in demand, there's little actually change in price because the market is so deep. Whereas if you go into a segment that has limited demand, small changes in this demand have a very big impact on price. And for that reason, we only focus on artists that we consider to be long-term relevant, both from a financial and art historical perspective. And we created about 10 parameters, both quantitative and qualitative, to identify is an artist truly long-term relevant. To give you a few examples, on the qualitative side, these are things like, is the artist represented by a large international gallery? Or very important, is the artist globally relevant? Meaning we only focus on artists who are relevant in North America, Europe, and Asia. And relevant really means, are you in the big museums? Are you in the big collections? Are you truly part of art history in these various geographies? On the quantitative side, these are things like sales volumes over extended periods of time, auction records, etc. So all parameters that you can really only meet if you're truly long-term relevant. And the reason why that is so important is because in the top-end segment, there's another sub-segment, let's call it that way. They're the young emerging artists. And if you look at this from a financial perspective, that's really venture capital private equity, right? It's super volatile, super speculative.
Yeah, it's just taking a chance.
Exactly, and it's exactly the opposite of what we want to do, right? So our philosophy is actually very conservative. So our philosophy and the reason why people invest with us is diversification, good risk-adjusted returns, low volatility. And therefore, artists that we focus on must meet all these criteria that I mentioned, and there are only about 40 artists in the world who meet this criteria.
Yeah, that fascinates me. So you've really boiled this down to these like 40 people who you're going to focus on. But you've said most of what you're doing is off market, right? So what happens if you don't have auction records? What happens if you don't have sale? Or can you get the sales records for these guys or gals?
Not most transactions are off market. All transactions must be off market. I always say, kind of to explain to people how we're doing this, we're not allowed to buy any paintings that I, as Pascal, independent of my financial situation, could ever get access to. Because if I can get access to it, you can, and many other people can. And the more people look at something, the less pricing power you have. It's very simple.
Okay.
Right? So for us, off market means we don't buy at auction, we don't buy at fairs, and what is quite extreme, we don't even buy paintings that ever traded at auction. We really go only direct through our global network of my art partners, and that way we don't pay the crazy high commissions, and we're really able to buy at quite significant discounts to market value, and that's the attractive part from a financial perspective.
So the records of past sales and past performance are from your network, basically.
So I would combine it. You have public data, which of course we analyze, but everybody can
There
analyze
is
it.
public data.
Yeah, so all the auctions are public, right? So of course we analyze that data, but it doesn't really give us an edge. Maybe it gives us an edge because we are a bit more analytical than other people, but in reality everybody can analyze that. But the key thing is that, as I mentioned before, 50% of the market is not public. So we don't have 100% of the data, of course, but maybe we have another 10, 20% of the data that an outsider does not have, and that gives us an information advantage.
Yeah, sure.
So number one, we have more data, which helps us to analyze what the right price is. And then on top of that, and that's kind of a different dynamic, it's about access. Right? It's not that the supply of paintings is publicly available on a website or anything like on a real estate platform, right? So you really need to know who to contact if you want to get access to what kind of paintings. And that's really challenging because those kind of channels are hidden for people like you and me.
Right. Yeah. The part I'm not getting is everything you do has never been at an auction. So you're taking auction records for that artist.
Yes.
And extrapolating.
Exactly.
Okay.
So there are
makes
kind
sense.
of two levels. Number one, you look at the artist. What is the general dynamics of the artist? Is his market or her market growing, etc.? And then, of course, you look at comparable paintings, right? So look, every painting is unique, and that is what makes it fascinating. But you can look at, paintings of the same time period, same size or similar size, similar technique, and you look at how did they fare in the public or private markets.
All right. Cool. So. You've also said you buy at a discount. So I'm curious about that because, there's so many things to go into here. All right, so let's talk about the acquisition side, okay? Yeah. How do you go about that and what are you looking for?
So as I mentioned, we have about 40 artists we focus on. In reality, at any given point in time, we don't focus on all of them. So we always have a subset of, say, 5, 6 artists. And then we are very specific as to what we're looking for. It's not that we go out to the market and say, hey, we're looking for paintings by this artist. Like in real estate, if you go to a broker and say, I'm looking for an apartment or a house, first you get all the things that cannot be sold, right? So we are very proactive, very specific in what we're looking for, what type of painting, what size, what style, what area, what time period, etc., etc. And then we analyze what we get back through our off-market channels, and we see, we check whether there are any abilities to buy something at a very attractive price point.
Is this something that happens frequently?
So we look at paintings almost on a daily basis, but the reality is, if you look at 100 transactions, many of them are paintings that we don't deem to be of high quality because it's obviously not sufficient just to buy a painting by a top artist. You need to buy a top painting by a top artist. So that's number one. And then even if you have a top painting, in many, many cases, in the vast majority of cases, the pricing is not where we would want it to be. So to buy a painting that is of top quality and in our opinion of a very attractive price doesn't come along every day.
Okay. Yeah, so let's talk about the pricing and maybe the value driver here, right? So what are you looking at? Like, how are you going to evaluate, is this also a good investment? Is it going to be a good investment for my investors or for the people who are buying these notes? What are you looking at there?
So for me, to simplify it, we go into a super boring market because the market for these top quality artists is a market that increases in value, somewhat inflation plus a little bit, but it's not a super sexy market. And it has very low volatility, so it rarely goes up like crazy, it rarely goes down like crazy. Right? So in itself, I would say if the art market were an efficient market, it's not very interesting because you don't get paid for the illiquidity of the product. However, and what makes it interesting, and what I mentioned a few times now, it's not an efficient market. And as a result of the inefficiency, as a result of our network and access, we're able to purchase something at a quite significant discount to market value, which means you go into a segment that in itself has very low volatility, so it goes up a little bit, but nothing crazy, but you're not buying it at that level, you're buying it here. And that means you really lower your risk substantially, you increase your potential returns, and that's the simple reason why the risk-adjusted returns in this type of investment, in my opinion, is very attractive.
Why are the sellers selling at that kind of discount?
So, as
I would
said,
figure if I own this thing, I want to get the highest price that I can possibly get for it.
So again, just to clarify, not every painting we're looking at is at an attractive price level. In fact, a very small minority is, right? So we're only focusing on those. But the reason why people would potentially sell below market is a seller has many different priorities. Of course, price is an important priority, but what is super important in the art market is discretion. So oftentimes people don't want that their social or professional network know what's going on. Timing is very important. You know, if you go, for example, to an auction house and you say, hey, I want you to sell this painting, they will tell you, yeah, it sounds very interesting. We'll put it into our next major auction, which may be in 6 or 9 months. But maybe you don't want to wait for another 6 or 9 months. So there are many different aspects that come into play. And if all of them come together, you know, that's an opportunity for us.
All right, cool. So maybe we can now move on. So you've identified the market, you've sourced the art, you've got access to the painting, okay? Now we got to bring it to your market, right? So you're going to turn this into an investment product. And here also you're doing some innovative stuff, right? So I know you're working with GenTwo, but maybe talk about how you were thinking about making an investment product out of this maybe before you met us, and how the relationship developed.
So the big challenge, you know, the reason why the vast majority of people have zero exposure to art as an investment are the high entry barriers, right? And there are essentially two types of barriers in the top end segment. There's price. These paintings are very expensive, so you need to
We're
buy
talking
large.
how much?
I would say they start at 500,000-600,000. Okay, but that's really the lower end. So in reality, if you want to build a somewhat diversified collection, you probably need an asset base of somewhere around 70, 100 million. Right?
Okay.
You're not going to spend 70, 100 million on art, but you're not going to spend 50% of your money on art. In reality,
Well, that counts
right?
me out.
Yeah, so it counts out most people. Okay, that's number one. Number two, given the inefficiency and the opacity of the market, you need to spend a lot of time and resource to get to the correct information. As we talked about, you cannot read a market research report by the big banks, and the few reports that are out there, they're not of a super high level that you would be used to from, you know, let's say other financial markets. So as a result of these entry barriers, there are just very few, at least professional players active in this market. And so we want, or what we're doing is we give people for the first time access to art as an investment in a simple but highly professional way. And I think to answer your question, how do we do it? I very much believe in diversification. Right? So we have a portfolio approach, which means that if you invest with us, you invest into a portfolio of 4 to 6 paintings by these blue chip artists. Each painting is somewhere between 500,000 and 3 million in value.
Okay.
Maybe first, why 500,000 to 3 million? You know, the reality is a lot of these so-called blue chip artists, they sell paintings for 10, 20 million plus. That's what you're going to read in the news. Sounds very attractive. But the reality is, if you want to sell a 10 or 20 million painting, it's not so easy anymore because there's simply not many potential buyers anymore, right? But the 500,000 to 3 million segment is by far the most liquid segment in the art market, which is very important, both, you know, from a liquidity perspective.
Liquid, relatively speaking. For the art market.
Yes, exactly. Now, why 4 to 6 paintings? Number one, diversification, as I mentioned. I strongly believe that if you invest in art, you should be somewhat diversified within the art market. But then you could argue from a pure quantitative perspective, yeah, it's not sufficiently diversifying. You should have 13, 15 paintings in portfolio. And the counter argument to that, and we haven't spoken about this at all yet, is that art in the end is a cultural good. Right? It's not a boring financial instrument. So there's a lot of intellectual, emotional things that come into art. We have a lot of initiatives around that. And we want to give investors the opportunity to build some sort of an affinity with the paintings and the artists they invest in. We have a lot of initiatives around that topic, but the point is with 4 to 6 paintings, you can still identify yourself. You can still learn about what you're actually investing in. With 13 to 15 paintings, that becomes very tricky. So that's kind of the reason why we do 4 to 6 paintings. And then, last but not least, you know, we need to get out of the investment at some point. So we have a holding period of what we tell people to conservatively estimate 5 years. And the way it works is as soon as a painting is sold, the net disposal proceeds from that painting are automatically distributed back to investors. So for instance, if you sell a painting after 2 years, you get a distribution. If you sell a painting after 3 years, you get a distribution. And that means, of course, when the last of these 4 to 6 paintings is sold, the investment vehicle is closed.
It's closed, okay. All right. But what exactly is this investment vehicle? Because the interesting thing here is well, I call it fractionalizing. You're making you're
Exactly.
making kind of shares
Yeah.
in the portfolio, and how do you do that, and what's the advantage to that approach?
So, as you know, we work with GenTwo. We
There you go.
have an actively managed certificate structure with you guys. And I've done a lot of research before I started the business about the best legal commercial structure. And in my view, at the moment, that is the most commercial structure.
The AMC.
The AMC, yeah. It's very flexible. It's relatively easy to set up. I think it's very clean. It's very safe. And very importantly, it's bankable, right? It has an ISIN, so you can buy it via your bank. You can it shows up in your account balance. It's just very simple. You don't need to sign any strange documents that you don't understand. It's a simple, clean, safe process.
All right. And how'd you find out about GenTwo?
As part of my due diligence, when I spent the 2 years researching the art market, obviously part of it was also, to understand what investment structure I would use. And I actually came up with the structure that you use at GenTwo. And when I moved to Zurich, I learned about you. I think I found you on the internet and I met up with you guys, and that's how we started working together.
Great marketing. All right. Hey, this is cool. So, all right, we have the market, you have the art, and we have the investment product. How do you find the investors?
So we really have two distribution channels. The main distribution channel is independent asset managers, family offices, and banks. That's really the key strategy, really, because they look at it from a professional institutional perspective. They're looking at the asset allocation. Art at the moment is zero, and we need to do the educational aspect to explain to them art should really not be zero. It should be 2, 3, 4, 5% of a well-balanced portfolio.
Yeah.
Yes. That's distribution channel number one. Distribution channel number two is obviously private individuals, but it's the channel that we have not forced very much yet, because that's really a marketing awareness game, and we simply don't have the resources yet to do broad-based awareness.
Okay, so you're marketing to asset managers who then sell these on.
Correct, to their clients.
That they can offer that as part of their allocations for
Correct.
their portfolio. Let's turn back from the investment part back to the art part, because I got to figure that it is, in a sense, also kind of a special investment, right? You're getting these beautiful pieces, and there's got to be an emotional or an intellectual or some kind of extra added attraction to this part of the investment for a lot of people.
So that's a really interesting point. I briefly alluded to it before. Art, in the end, is not a boring financial instrument. It's a cultural good. So, as you said, there's a lot of intellectual, cultural, emotional aspects to it. I would say when we, as a company, make an investment decision, we completely ignore the emotional element. Because if you make investment decisions based on emotions, oftentimes you're probably going to make mistakes. So we try to be very objective, very rational as to what we buy. But once we bought it, a painting, then of course we really play with this emotional, intellectual, educational part. And it's the same with our investors. So we create weekly reports where we really try to educate people about what's happening in the global art market, what are the dynamics of the market. We do events and exhibitions where we sometimes display the paintings they invested in. We give all of our investors mini versions of the paintings they invested in. So we try to build this whole emotional concept. But maybe one thing to add to this is, if you look at our investor base, it's actually interesting and quite counterintuitive. We have kind of two buckets or main buckets of investors. The first bucket, I call them pure financial investors. Those people, they couldn't care less, to be honest, whether you invest in paintings or the stock market or bananas. As long as the financial returns are attractive, go ahead. And the second group, I call them intellectually curious people. These are people who say, yes, it's an investment. Of course, I want to make money. But if I can learn something in addition, intellectual, cultural, emotional, it's attractive vis-a-vis buying some more stocks.
All right. But because this is a collective investment, so I can't buy the thing and hang it in my living room, right? And actually, that part of it, is also interesting, like the logistics of the whole thing. And I think that's also where I believe GenTwo helps out a bit. So you purchase this art. where does it go? How do you custody it, right? And how can I, as an investor, maybe potentially go see it?
So all the paintings are stored at the Freeport in Switzerland, climate neutral, there's full insurance, etc. So it's very institutional. If an investor would like to see the paintings, they can always talk to us and we can go with them to the Freeport, or they can view the paintings at some of the exhibitions that we do.
Does that happen? Do people go?
No.
But
it's very interesting. It's interesting that just yesterday, actually, I got an email from one of our investors, and he got the mini version of one of the paintings that we recently bought. And I don't think he has a very strong art affinity or art understanding. However, he was super excited that we bought this painting because last year he went to a major museum exhibition where this artist was exhibited. And those are the kind of things that make me happy. Of course, I think the financial investment, that's prerequisite. You must work, you need to get good risk-adjusted returns, but it's interesting that you can get more out of it than just that. It's really this intellectual, emotional aspect I think is very intriguing and interesting.
Yeah, look, I just had this vision in my head of you all going down to the warehouse with the Prosecco, And
It's interesting.
Maybe someday.
Many people ask about it.
Yeah.
Nobody so far wanted it. It's interesting.
So Pascal, you weren't an art expert. You kind of, maybe not an expert anymore, but you've been in this market for a while and you're working with experts. So you must know something about the art market in general as well. So maybe you want to take us through a little bit where what happened this year, where it's going.
So it's definitely true that I'm not an art expert because I've not been in this industry very long. However, I really strongly believe that if you want to succeed in business, you need to be extremely passionate about what you do, and you need to try to be the best at what you do. So yes, I'm definitely not an art expert yet, but I'm trying to learn as much as possible. So I think I'm quite comfortable with what the market looks like. So if you want to know kind of how the market performed this year, for instance, it's been a quite challenging year for the art market. I think most people, collectors and industry insiders, have been quite cautious. And what that led to is really a quite significant reduction in transaction volume. A lot of people who in a regular market environment would have gone maybe to auction house to sell, they said either I'm going to hold off, wait a little bit and see how the market develops, or, and that's another big development, there was a big shift from public to private market.
Which is good for you.
Yeah, it's very interesting. I think in general, a lot of people, again, because they were cautious or a little bit worried about the direction of the market, they said, if I go to auction, I have no control, right? If I go to the private market, I have much more control over the transaction. I have my asking price. If I get to more or less my asking price, I will sell. And if not, it's not a big deal. Nobody really knows about it. So those have really been the big changes. But in the end, I think quality sells. It's like in everything. If you go for a top quality artist, and within the artist you go for a top quality work, there's always a market.
I'm curious to understand more. Why has it been quiet this year?
It's interesting. I cannot give you the answer.
You don't know.
I think it's a little bit counterintuitive because, as you know, financial markets have actually performed well. People are quite bullish. Yes, there are worries about the geopolitical situation, but generally speaking, the mood is relatively upbeat. So I cannot tell you why. I think there's a very strong herd mentality in the art market, that some opinion leaders have an opinion and then everybody follows it without maybe thinking about it too much in very rational terms.
Speaking of geopolitics, can I think of art as a safe haven investment?
Yeah, I definitely think so. I mean, if you look, again, you need to look at what segment, right?
You're talking blue chips.
Yes, I'm only talking about the blue chip segment. And yes, for sure. I mean, if you look at the traditional collectors of this segment, these are your ultra net worth individuals. And they use this as a capital preservation, safe haven investment. They have some gold, they have some top quality art. And for them, conceptually, it's actually a very similar investment.
Next year, art market?
Well, it's interesting. In November, so a few weeks ago, you had the biggest auctions of the year there in New York. You just had Art Basel Miami, which is an important art fair. And again, I talk about herd mentality, but the mood seems to have shifted a little bit again to become more positive. So I wouldn't be surprised if the market, it will not become exuberant, which is not good for the market anyways, but I think it will become more positive. Again, I think for our segment, it doesn't matter so much either way because it's a quite boring segment. But what happened again this year is really that the very speculative part of the market kind of disappeared, which I think is healthy for the market. And again, it doesn't impact us because that's not the segment that we're focusing on.
All right, maybe just a couple of other things that I'm curious about. First of all, you're making these paintings and these artists available to a much broader range of investors than was possible before. So do you have to like educate them, or I mean, are people coming to you and going, "Wow, I didn't even know I could do this"? And
it's all about education.
Yeah.
Nobody is looking for this investment.
Right.
Right. So, to make a stupid example, I think at least if you do Google AdWords, you will have zero conversion because nobody looks for art investments. The fact is, nobody even knows that something like this was possible, and therefore nobody is looking for it. So, right, we need to educate people as to the dynamics of the global art market, why supply demand works the way it works, why it has a low correlation, why it's an inefficient market, how you can overcome it. And then of course we need to build a lot of trust with the team, show them that we are very professional, that we created a structure that has complete alignment of interest, which is super, super important. So we only make money if our investors make money. It's all about education. And the more education we do, the more comfortable usually prospective investors become, and that increases, of course, the likelihood that they invest.
Does Partasio have competitors?
We don't have a direct competitor per se. There is a very large company in the US that does something similar, meaning philosophically speaking, they also try to make top quality art more accessible. So they're very much the same. Their approach is a bit different. So they have a legal structure which is more geared towards US investors, of course. And commercially, the biggest difference is that with them, you invest into individual paintings. So they show you a few paintings, you can say, I want to invest into this one and into that one. And that may sound very sexy, but I think it defies the purpose a bit, because if I'm an investor who doesn't know much about the art market, and that's the vast majority of investors, how can I define or decide which painting I want to invest in?
Yeah, that's not diversified at all.
So I believe that the concept of having a diversified portfolio is much more professional, much more institutional. So that's the big difference. And then there are a few companies that do something similar to this American company in Europe, but less than a handful, and that's it. So it's a very small market in the sense of in numbers of companies. And I think the reason for that is, as I mentioned in the beginning, the barrier to entry on a company level is actually quite high, because you need to really combine the financial and the art world together.
Okay. The one thing we didn't talk about, which I liked from our conversation at the beginning, was the idea of flipping.
Yeah,
right?
Okay.
That was kind of cool. So the question is, if you're buying these paintings at a discount, right, why don't you just flip them like the next day?
Yeah, it's a very good question. So flipping is a very bad word in the art market. And of course, given our strategy from a pure commercial perspective, we could do some flipping. However, we do not do it because after you do it a couple times, the market knows about it, and then you essentially blacklisted, and you will not be able to get access anymore. It's very simple. So depending on the dynamics and the strategy of each individual painting, there could be a shorter or a longer holding period, but it's certainly not that we're going to buy something and sell it 2-3 months after purchasing it.
Okay, cool. Hey, Pascal, that was really, really interesting. Thanks a lot. Thanks for coming.
Thanks a lot, Tom.
I see you, man. Bye.